Well, as promised, let's get straight to Epack Prefab Technologies. That's the first management on the show. The company reported actually a mixed set. To help us out with what went well and what didn't go so well in the past quarter, we have Sanjay, the MD and CEO at Epack Prefab Technologies. Hi, Mr. Singhania, good morning, and thanks a lot for joining in. Well, just coming to you in a bit, but we're just highlighting the top 3 points that we're going to be talking about. There's a sequential dip in performance. Why is that? We want some clarity on that. The heavy lifting is needed in Q4. Are they equipped enough? And also, what are the order book trends? Well, Sanjay, let's get straight to the point then. The revenues of around 325 crores in Q3, that's actually down close to around 20-25% sequentially. Now, typically, you have told us the second half of the year is much stronger. So firstly, in Q3, was there any kind of project that got deferred, got pushed to Q4? And now, what does this mean in terms of what you end for FY26 on the top line? And how does it alter your margin guidance? Please go ahead.
Yeah, good morning. So while if you compare the quarter on quarter, yes, you may see a dip. But if you look at the quarter on a year-to-year basis, then definitely there's an uptake of around 31% in the prefab business. And overall, the revenue of the company has grown by 20-23%. So yes, during our last conversation, I said that the second half is always better than the first one, and I continue to maintain the same story. This quarter, there were certain challenges, especially related to site unavailability. So some of our big customers, they could not give us the site readiness because of the ongoing monsoons and prolonged monsoons. So that delayed the revenue for us. We had an extra inventory of finished goods of around 35-40 crores. That could not be billed in this quarter. So that further added to the overall inventory and the cash cycle also. And as far as the commitment to the market is concerned, we maintain that this half is going to be better than the last half, and our revenue guidance of annual revenue guidance of 1500 to 1550 is still maintained. We have the order book in hand. Our pending order book right now is 1215 crores. So it gives a clear visibility for the next 7 to 8 months. And the way we are building on our revenue, the way we are building on our order book, that is also very encouraging. We have become a preferred player in some of the new age businesses.
Sanjay, yeah. Just to confirm that, you'll end the year at around 1,550 crores, right?
Yeah, between 1,500 to 1,550 crores.
So that means you'll do around 450 to 500 crores in Q4. That's correct?
Yes.
Got that. What about your margins? I think earlier you were flirting with that in that band of around 10.5 to 11%. You're maintaining that band?
Yes, definitely. Yes. See, overall, in the 9-month basis, our margin is 10.8%. Yes, there's a small dip in this quarter. It is 10.1%. But on an overall, annualized basis, the margins will be 10.5 to 11.5%.
Yeah. What was the impact of the issue that you said in Q3 about one site not being ready and therefore that order got pushed forward? And has that kick-started in Q4?
Yeah, it got kick-started. It is not only one site. In the south, the monsoons got prolonged and the sites were not ready from the civil side in the month of October and November. So the revenue got, postponed there. But now, all the drawings are very important for us. Design approvals are important for us. So most of the bigger projects which we have in hand, all the design drawings and everything is ready. And, manufacturing has started. So we expect this quarter to be much, much better than the last quarter.
Okay, well, that's prefab, right? Technology of the future, or technology of the present. And I hope it's something which is going to be watched. I mean, I think you've got a couple of listed companies now along with you out there in this space now. Thank you very much for joining us, sir. I really appreciate it, and we wish you all the best of luck. 1,500 to 1,550 crores in FY26 in terms of revenues and some indication on margins, etc. as well.